The views discussed in this conversation are the views of individuals and not of Arrington Capital. This podcast is provided solely for informational purposes and is not financial, legal, tax, or investment advice. The participants of this podcast are not recommending any particular security, protocol, token, financial instrument, or other tradable asset or any investment strategy. It is not offering to sell or soliciting to buy any security or asset.
Hi, everyone, and welcome to the Pirate Pod from Arrington Capital. I'm very excited about today's guest, Jacob from Glacis Labs. As our world here in Web3 becomes more and more connected, the team at Glacis, who we've invested in recently, has recognized the growing need to secure and make more efficient cross-chain communications. They've developed a unique router and firewall solution to enable the exchange of data and assets between all the various blockchain networks that we interact with today. We're going to dive into all of these things that they're doing between granular routing, risk management, developer enablement, and the potential for apps that are spanning a variety of networks, including the work that they're doing to work with existing cross-chain comms protocols and what that means. But first, as with all of our podcasts, I want to turn it over to Jacob to give a bit of his founder story, how he got into this space, and how he ended up founding Glacis. So, Jacob, could you take a minute to introduce yourself and how you arrived in Web3 and what you're doing now?
Absolutely. Thank you, Kelly, and pleasure to be here talking on the Pirate Podcast. I've been in the space for almost 9 years at this point, and at the time where I discovered blockchain, I was at JP Morgan down in New York City, and like most fintech bros, was gambling on ICOs using Ether Delta for those that remember or know what that is. And just started reading white papers and realized over the course of about a year and a half, I was spending most of my time in office reading white papers and participating in ICOs and just exploring the technology. And then a couple months went by and I realized going to a number of the meetups that I started having people coming up to me because I knew more than them. So just through, I guess, my obsession, I kind of got deeper into the space. And then in January of 2018, right as the market crashed, perfectly timed, I jumped out of my job at JP Morgan because I was paper rich. 40 days later, needed a job and ended up at Consensus. I was there for 2 years, did token economics, which is like system design, incentive design, as well as digital identity work. And then in 2020, Consensus downsized. So me and the token engineers from a spoke called Token Foundry realized that identity was one of those ugly ducklings that was critically important to the blockchain space. Digital identity doesn't need a blockchain, but blockchain desperately needs an identity layer. And so we co-founded at the time a startup called Spruce, which has gone on through Y Combinator and has raised a second round. And we're basically selling identity-based solutions and moving forward what are called verifiable credentials, how ID and credentials work on chain. Stepped away from that after about a year, just difference of opinions, like going from living with someone to married. Still respect the heck out of Wayne and Rocco. And during the transition from there, spent some time over at Near Protocol doing ecosystem, business development, and strategy. And candidly, I was there for about 6 months before I got approached through a friend of mine over at Paradigm that Lido was looking for someone to lead the business development and partnerships. So I jumped out for that because liquid staking was not a thing at this point. This was probably beginning of 21. It just seemed like too good of an opportunity. The whole thesis made sense. If you like staking and you like DeFi, why not have both? So I was there for about 2 years, and that boiled down to my job was basically shove as much ETH as possible into the protocol. And then due to regulatory shifts here in the US, a lot of lawyers in my circle were kind of suggesting, as a American citizen that was doxxed high profile at the biggest DeFi protocol in existence, lawyers were kind of suggesting I should probably do less public speaking, less proposal writing, basically less things that leave artifacts online in case regulation ever changed. And as the head of BD, my job is to talk and write a lot. So came to a mutual conclusion that I should step away. So in June of last year, I transitioned away from Lido and then was trying to explore what I was going to be when I grow up next. And one of the problems we ran into at Lido pretty often is that most protocols get sufficiently big, such as Lido at 30 billion, where they're not willing to put user funds at risk. And one of the problems last cycle was single bridge failures. The hacks of Nomad and Wormhole and a few others made Lido very hesitant to work with a single provider. And at the time, there wasn't a multi-bridge aggregator or protocol in place. So a little bit later after I left, they actually got Wormhole and Hexler to kind of come together to win the deal, because none of them were going to win it otherwise. And that's what actually led to founding of Glacis, was that exact problem.
JP Morgan, Near, Lido, Consensus, your own startup in the space. So there's pretty much nothing you haven't done or seen at this point. I'm glad that you are here visibly on our podcast today, Jacob, and thanks for joining us. Can we kind of context set on the cross-chain stuff and why it isn't as good as it could be? It's not, like you said, you've been working on this problem and you've been running into these issues for a while. Why isn't it as good as it could be yet? Like, what is out there right now making this not 100% mature?
There's a lot of things, and I don't think it's any one specifically. For the first couple cycles, I just don't think the technology was there. Being able to have more performant blockchains that can handle higher throughput of transactions. I mean, when we look at the global internet scale, no chains a couple years ago were there. The other problems boil down to, overly simplified, liquidity and fragmentation. You have users split across wallets, split across exchanges, split across chains. You have DeFi protocols split across chains. You have the liquidity for those protocols split across chains. And then you also have differing bridge providers. And historically, last cycle, bridge providers were usually the main source of lost funds, totaling about $3 billion. So for a normal person using my mom or my sister or my wife, that's too much mental overhead. Saying the whole adage of do your own research just is not how we're going to onboard the next billion people. Mm-hmm. Most people use the internet to take an action. I buy sneakers on Amazon, I visit my friends on Instagram, and I watch cat videos on YouTube. But I don't necessarily have all these design decisions about how do I log in and how do I transfer funds to be able to take that action. So what's ended up happening with all this fracturing is this patchwork of coverage where some bridges only cover some chains. And if you're trying to build across a couple of them and you have a gap in your service provider, what do? There's also competing standards that have started emerging. So all the bridge providers are vertically integrating, which makes sense from a business standpoint. But now we have each bridge with their own ERC modified standard, ERC20 standard. Then you have the L2 ecosystems like OP Superchain, ZK Elastic, or AgLayer from Polygon. And they all are working on modified ERC standards, and they're all incompatible with each other. So we're creating this problem yet again coming up over the next couple of years, in my opinion, of course.
And these are all, I'm not super technical, so we're going to get into some stupid questions and you'll give me some smart answers. But is this like generic message passing that exists today? That's what's happening in any application that anyone's building with some of the patchwork that you're talking about? That's basically the standard today, right?
Correct. So I guess it's a little bit of the nomenclature is technically everything in Web 2 is all data packets or messages. You're sending a message to accomplish an action. For cross-chain, at least in our industry, historically, when you say cross-chain or messages, people are generally thinking about the liquidity layer, which is token swaps, token transfers, moving between chain A and chain B. However, that is just a subset of more generalized messaging, because messaging may not be a value transfer. Looking at something like Swift Network, 90% of their messages are not value transfer. They're analytics, authorizations, confirmations, querying. It's just all the things around the value transfer. Only about 5 to 10% of them are actual settlement and value. But that's inverted today because of the unique property of incentivizing actions and users with tokens. Most of the market right now is concerned about airdrop and points farming, very candidly, because every time there's a new chain or there's a new protocol, there's an opportunity to quickly move those tokens. But messages can be anything.
And then state of the union as we are today, life before Glacis, What does congestion look like, and what does that matter when it comes to cross-chain messaging?
Yeah, so I guess today at this exact moment, congestion is actually not too big of a problem because we're in a bit of a choppy bear, which tends to happen. Our industry seems to be very reflexive still. Um, the main issue is not so much with actual congestion, but it's what happens when, especially for high volume messages. So if a protocol is sending, just as an example, 10,000 messages a day or even 1,000 messages a day between chain A and chain B. Well, not all those messages are of equal value. Some of those you may care primarily around cost and speed of delivery, like you're just checking a state. Is someone holding an NFT? So for that one, congestion matters a lot more because if you're starting to pay $1 per message instead of 10 cents, that's a huge increase in your operating costs. And so the issue there is twofold. One, if there's using layer zero as an example with their OFT standard, if an OFT mint is happening and there's a lot of congestion, but you're using the layer zero infrastructure, do you just eat that loss in your business? Are your margins good enough to handle that? Maybe, maybe not. The other issue is more benign, but what happens if one of these bridge protocols is just down for an upgrade? They're just upgrading their validation systems. Again, it's going to come back online, but do you just turn off your business and take a nap until the business comes back online? So that's kind of the main issue when I speak about congestion or patchwork of access is if you're trying to go from one place to the other, there's a bunch of different issues that could potentially come up.
And security issues that exist today, is Glacis solving for some of those things? And if it is, can you just lay out what those are?
Yeah, we're attempting to. Like everything in this space, we believe in decentralize all the things, but at the same time, most systems that humans engage with kind of are Pareto efficient and settle down to like a small distribution of outsized performers. I think the biggest one is honeypots. That's what caused so much of loss of user funds last cycle is this idea of locking up a token on the source chain and minting some synthetic and trusting a single bridge to provide that security. So if that bridge is compromised, then all those assets are compromised. So that's probably the biggest one. The other is what I would call long tail exposure. So as we saw last cycle, we're seeing this cycle with L1s launching that are a dime a dozen, L2s that have launched that are all very similar, AVSs for eigenlayer restaking that are very similar. There's a risk of like, are they going to be here in 5 years? And as a developer with all this other mental overhead and decision making, now you have to also weigh, if I build on ABC chain and they disappear in 2 years, do I have to rebuild the entire stack somewhere else? So that's what I mean when I say like long tail exposure. I think there's a glut of block space at the moment. I'll leave it at that.
And as the industry matures and some of these players get a little bit more robust, like take Coinbase, for example, does Coinbase fix this for retail because you can just stick within their app? I know it's not decentralized, but you can stick within there and go cross chain and cross assets and exchange these things. You're kind of taking this a level beyond that to the more technical nuances and looking at, not just what's Coinbase, but absolutely everything around the world, right?
Exactly. And you're spot on. I think Coinbase is executing brilliantly, and I think they're going to capture a large part of the market. I view everything in this space as like a sliding scale of choice between self-sovereignty, security, and convenience. There's going to be probably a vast majority of people that are going to want to use a centralized exchange like Coinbase. It's convenient. They have insurance, chargebacks, refunds, all those things, those creature comforts we're familiar with. And I think they intend, at least Brian is intending to do good by the industry. However, again, the whole narrative is decentralization, no single party risk. There is the big risk of not just them being centralized, but they're subject to more direct regulation of the sovereign land they're in. So the US for Coinbase in this case. And there's also going to be different compliance requirements. And so I think it's going to be just like I said, a sliding scale where if you want to be totally off the grid, totally anonymous, full self-custody, self-sovereign, you can do that. But you're going to lose if you send it to the wrong address or someone doesn't ship you your sneakers you purchased, you're going to be out of luck. And then some people can be willing to give up some of that control for creature comforts, depending on where you sit in your viewpoints, I guess.
All right, switching gears a bit, can we get to the core and heart of Glacis? What's the product? Is it more cross-chain risk management? Is it more empowerment? Talk to us about the basics of what Glacis is.
Sure. So Glacis, at its simplest, which younger people may not get this comparison, so I'll dig in. We are viewing ourselves as a router and firewall. So think Cisco from Web 2 with network switches, but for software and blockchains. So we are not part of the transport layer. That would be, I define transport layer as the general messaging protocols, GMPs. That's the likes of Wormhole, Chainlink, Layer 0, Axler, Hyperlane, insert others. We sit on top of them and we take a fully agnostic view of the transport layer. So going back earlier, if your protocol is sending out 1,000 messages, each of those messages have relatively different value. Asset transfers, you want to increase security. You're probably less cost sensitive and you're okay with them being a bit slower. Governance updates, you might want to increase security as well. But then something that's a state check where you just do it regularly to get a time series, you may not care if you lose a couple of those. So less about security and more about cost, because those 1,000 messages, you don't need to pay the same price for all of them. So what we are is we allow protocols to route across those based on policies or parameters that they put in place. And then combined with off-chain, our plan is to build, as we're indexing this data, we'll build off-chain solutions that are value-add services that can offer things like predictability, multi-hop arbitration. So if you're trying to go chain A to chain D, is the optimal path A, B, C, D? Is it A to D? Is A, B, C, or can't do A, B, C, D again, A, C, B, D? That's kind of the long-term value is you have a topological map and you can use Glacis to kind of determine the optimal.
Do you say start and end and Glacis figures that out, or are you having to sort of pick and choose from those things? I guess the other question is like how self-service is Glacis, how plug and play? And I think you're focused on developers, right? This is something the developer is going to pull in and use.
Since we're still new, we don't have an SDK yet, but we're actually working on this. So right now the architecture of Glacis is pretty bare bones. There's a routing contract. It's immutable, it's permissionless, and can't be upgraded. That receives the message, the destination, and the configuration of that transport. And then we have a series of adapters that plug into each of the GMPs. Those are also permissionless. So you can either use the ones that we maintain, they'll always be audited, up to date, and secure, or some protocols, again, mentioning Lido, that want more granular control can build their own adapters for the router, but then they're responsible for keeping those up to date and managed. So we tried to build this as permissionlessly as possible.
And let's separate this out too, because you keep mentioning these GMPs, these message passing protocols, and that's going to be like a Wormhole or an Axlar, right?
Correct.
And you've also integrated with some chains directly. Can you talk a little bit more about what that means and what those initial contracts that have been completed, like what those look like within each of those?
Yeah, so from a ecosystem perspective, the L123s, we don't need any direct interaction or permission from them. As long as they have a supported bridge endpoint, then we can just integrate that endpoint and index it, and then it's live. So they're a chain, for example, when they launch on mainnet, as long as they have an endpoint from layer 0, Glacis can deploy there in as quick as 10 minutes for EVM chains. And then for the GMPs, it's the same thing. We design the architecture that we don't need their permission, and we can just sit on top of them. We chose kind of the 5 biggest ones, but we're planning to expand to the long tail of bridges to fill in gaps in coverage and chains.
So where are the risks for developers that are building these new applications and using Glacis? Talk about the risks and security of all of it.
Yeah, the most basic, of course, there's going to be additional smart contract risk because instead of interacting with a GMP directly, you're now interacting with Glacis, which interacts with the GMP. So there's an extra layer of smart contract risk.
Is it interacting in the same way or a different way with the GMP than they would have previously?
The same way in the sense that Glacis can be configured to be a simple pass-through. So if you're like, I want to use Hyperlane 100% of the time, and Glacis is there, it can just pass through and offer no value add. But if you want to do things like configurations, have failovers, dynamic retries, using Glacis allows you to say, oh, there's an issue with Hyperlane, let's go over to Wormhole or whoever, and have policies in place to handle that. The main idea was not having to have developers wake up at 3 a.m. if a bridge goes down. In fire drills, you can create better liveness and enterprise uptime type of security, or excuse me, guarantees.
And you've launched on 5 major bridges or GMPs so far, right? And you've also launched on a number of EVM chains.
Starting next week, we'll be attempting to launch 1 per week for EVM because it's relatively trivial at this point.
And what does it look like for your roadmap to be going beyond EVM?
Yep. The most obvious would be Solana, the SVM. Clearly, they've had a blow up year in a good way. So we're working to expand there. There's biggest difficulty isn't on the general message passing. It's more on cross-chain token transfers or the swaps because of the different standards. So I would say Solana is probably number 1 on our non-EVM roadmap. Cosmos is up there and we're keeping an eye on it, but it's too early to tell. Would be Telegram because they've now thrown in the TVM. Outside of that, it's probably going to be a bit wait and see, but I think EVM, Solana, Cosmos and TVM cover everything of value mostly.
What is the cost savings or the additional cost?
So since we just got live about 3 weeks ago, we're actually monitoring this and starting to build out gas estimations. If you are looking for the fastest and cheapest, absolutely at all times, Glacis will probably not be able to compete versus a direct integration with a GMP. And the reason is because there's additional logic and contract calls that are going to happen. But that's not our target audience. If you don't care about security and you just want to YOLO and be a degen as a protocol developer, we probably can't service you. We're looking at protocols such as the Aves, the Makers, or I guess now it's Sky, Lido, ones that have a billion or billions at risk, where, if we have to pay a nominal extra fee for additional services and security guarantees, they're not going to be cost sensitive, similar to some younger maybe protocols, for example.
Yeah, that makes sense. And what does the go-to-market look like? So you just went live 3 weeks ago. What are you seeing for early adoption, early use cases, early participants, developers that are implementing Glacis into what they're doing?
Yeah, it's been actually really interesting because I said this when we first started conceptualizing Glacis. I said the market needs something like this, but it may not want something like this. And I think my conviction in that's reached 100%. Just looking at this year, airdrop farming, and I heard someone call it points lasagna, and I love that, where it's like, go to Barachain and stake in this thing, do this thing, get leverage, and you get 18x points across these 4 protocols. It's made security fall to the wayside a little bit. And unfortunately, I think the biggest driver is going to be failures, looking at CrowdStrike as a single vendor failure that just happened as an extreme example. There's a little bit of challenge with survivor's bias. That being said, the go-to-market is primarily talking to protocols or builders that are in their second or third or fourth cycle. First cycle are developers, and this is a broad statement that doesn't account for everyone. First cycle developers are primarily looking at where the narrative is and where the most likely airdrop farmers are to get users in TVL. So emerging chains tend to draw the more risk on protocol developers. But generally, it's just because of my extensive background in the space, I've just been going hand-to-hand combat for a lot of these early conversations.
Do you think it trends back where security becomes important and it becomes front of mind, where it's sort of fallen to the wayside right now?
It has to. Again, if we want 3 billion people on Web3 in some way, shape, or form, that means there's going to be enterprises like a Coinbase or banking that eventually gets in, or real world, or whoever it is. But there's going to reach a point where you're just not going to be willing to risk billions of dollars. Look at banking infrastructure as a parallel. The amount of redundancy and security protocols that they have in place is extremely high, because JP Morgan can't just be like, oops, we lost 5 billion. Sorry, we'll launch a new token to inflate it.
Do you see yourself as more like a cross-chain company or security company?
Both, but I
Okay.
would say our priority above all else in terms of values is security first and foremost.
If security is paramount, do you think it becomes an issue? Okay, there's Glacis and then there's all these GMPs. Like, do you think that the stack starts to have security issues and you become the safest thing? And do you mitigate any of the other risk that's happening there?
I think so. Going out into the future, what I'm thinking is similar to what we saw with Ethereum client diversity, where Geth was 90% of the market or whatever, and everyone started saying, "Well, what if there's a bug found in Geth?" I think it's the same. A lot of the bridge providers are moving towards multi-validation models. So you use their endpoint and then you use their security rails or others. I view those as similar risks that at some point Glacis is probably going to want additional routers or endpoints built by other companies that still plug into the adapters in case of the similar issue as a Geth bug being found. We want to make sure we're not the only ones developing on the protocol.
So you launched 3 weeks ago. You've recently also done a fundraise. We've got a lot of founders that listen to this podcast. Can you talk about your recent fundraise, the process, what that was like going through it?
Yeah. So we started fundraising probably in January and finished up by about end of March. The market then was definitely swinging towards bullish. So I would say it was a touch easier. Also, just again, with my network and being in the space, I had probably more access than a cold start founder in this space. Right now, I would say the raise environment is more difficult, but I still see people closing deals. I think with the political climate of the US, along with still regulatory uncertainty, it's creating kind of this issue of sidelining some investors until they see what happens, which I think has been making it a little bit more of a pessimistic environment for raising. The other thing that seems to be happening is narratives. The cycle for narratives and fast follows seems to be shortening. So taking Pump.Fun, which was a star child of this cycle so far, I've heard of at least 10 or 11 clones or forks that are coming out on different chains. Similar with AVSs and Eigenlayer, anything with the word AVS was getting fundraising. We're coming out of AI. So these narratives seem to be shortening. So if you are doing an Eigenlayer competitor or what have you, be mindful of like the appetite and the fundings going on those different subcategories.
What does the next 6 to 12 months for Glacis look like? And how are you sort of getting out there and competing against some of the legacy stuff and telling the story about the importance and strategic play with security?
Sure. The next 6 to 12 months is pretty easy for me. More clients and getting people using it, getting data through the protocol, so we can start building out some of the other value services, and then do the next fundraise so that we can actually start scaling the team. The biggest thing we're seeing in terms of like an immediate use case is there's an XKCD comic that's very relevant to this. But it's a joke about there's 15 standards, and the middle panel talks about this guy. We'll make a 16th standard to unify all the standards, and then sometime later there's now 16 standards. And that's probably my biggest concern about this space is we have different token standards for different virtual machines. Then within EVM alone, the bridges, and it makes business sense why they do this, the bridges are vertically integrating because they want to lock you in their walled garden. But then now even some of the L2 ecosystem chains like OPZK I mentioned in Polygon are also making standards. So now there's going to be this really unusual problem of how do you map between incompatible standards? And so a lot of these bridge front ends that you would see, so Stargate, Jumper, Squid, Portal, that allow a user to connect and do cross-chain swaps, are running into the issues of, well, Stargate supports OFTs, but they don't support Wormhole's NTTs. So if you have both, now you have to go to a different user interface. And we're talking with all of them about potentially building a wrapper so that you can route across those via single integration. But that was something we didn't expect, is having this many standards proliferate. And it caused a net different problem we hadn't anticipated. And we kind of need to get through that before we can get to our primary mission.
Yeah, and each of those is so time consuming. How can people get involved and follow along on the Glacis journey?
Yeah, our website is glacislabs.com. Follow us on Twitter, Glacis Labs. And we have a developer relations Telegram, which is directly off of the X account. We don't have a Discord yet because we're so small. We're trying to stay lean, but we'll probably stand that up in a couple months. But if you're building and you have any issues with current cross-chain implementations or questions, or just want to try out Glacis, we'd love to have you in.
Awesome. All right, I'll drop all this in the show notes. And thank you, Jacob, for coming on and sharing the story of Glacis with us.
Hey, thank you, Kelly.